Good day. I'm Vinette van Wyk, Head of Distribution at Catalyst Fund Managers. Today I'm joined by Mvula Siroto, who is a Portfolio Manager of our South African long-only listed property portfolios. At Catalyst, our primary research methodology is bottom-up fundamentals driven, whereby we do individual stock analysis on every stock within our universe. A very key element of our process is our team's physical attendance of these real estate conferences and physical site visits, and today we will be sharing more about that with you, our viewers. Mvula, as COVID restrictions are easing across the world, you've had the opportunity to attend a lot of these physical site visits abroad in the first half of this year. It's great to have you back on home turf. It's great to have you in Cape Town. Maybe you can share with our viewers where you've recently been, as well as what some of these key takeaways were from these visits.
Thank you, Vinette. It does feel good to be home. I did miss a bit of the mountain and yourself, of course. Look, the team has done some extensive travel these past 6 months. We started off our tours with the Mass Real Estate team, getting to tour some of the retail centers and under construction residential development schemes. I think it's important to highlight that we toured these retail centers midweek, and it was encouraging to see the foot traffic during the week going through these centers. Another member of the investment team got to travel with the NEPI Rockcastle management team across 8 of the retail centers in CEE, which included Poland, Romania, and Lithuania. We think, notwithstanding the recent management changes, it was encouraging to see, and the tour cemented our views that the team does have in-depth knowledge of the assets all the way to asset level. I got the opportunity to travel to the UK and Western Europe, touring some of the assets planned by the Instinctive Partners on behalf of Emerson, Capco, Vukile, Cap Regional, Shaftesbury, and Industrial REITs. I think on the whole, it was encouraging to see the level of trading activity in some of these retail centers, and it was encouraging to see, and we do think that the recovery story in retail is playing out. On the industrial side, the industrials and equity side visits gave us insights into the multi-let and big box industrial subsectors, where we got to get an understanding of the key drivers that are driving those subsectors. Within the big box industrials, we do continue to see strong market rental growth and demand, which is not matched by the supply that's currently playing out in that node. And we do think that will continue to bode well for the subsector with the low vacancies and high occupancies within that subsector. Over and above that, I got to spend time with the Lighthouse management team, touring some of the French assets that they recently acquired from Vereld Harbor, previously owned by Unibail. I think this site visit gave me insights into the asset management opportunities within that portfolio. There are a few assets that have got high vacancies, and it is encouraging to see the plans and initiatives that management have got to potentially create additional NOI and lowering vacancies over time.
Mvula, you mentioned as part of your tour that you got to meet with the management teams of both Capco and Shaftesbury. And we know there's a lot of talk in the market right now about this proposed merger. What are your views regarding this proposed transaction?
Yes, look, the site visit gave us an opportunity to actually spend time with both the management teams and give us insights into the merits and opportunities within an enlarged entity. Look, we think from a Capco shareholder perspective, the deal does make sense. Firstly, given that Capco already owns 25% of Shaftesbury, and already given the overlap in the portfolios, we do think it makes sense from a Capco shareholder perspective. Bigger is not always better, but we do think in this instance, firstly, given the overlapping portfolios, the close proximity of the assets geographically, and over and above that, the benefits that we think will play out in terms of cost and revenue synergies, we do think there'll be value to be created over the long term.
Mvula, you and I know how key these physical site visits are to the way that we live and breathe listed property at Catalyst. But maybe you can share with our viewers why this is such a fundamental piece of our process by illustrating that with a recent example.
Yes, I think it's important to highlight that these site visits do bring us closer to the assets in which we invest in. We don't just spend time behind the desk modeling away. We think site visits are essential to the process that we currently employ at Catalyst. Firstly, they bring us closer to the look and feel of the asset. Real estate is a physical asset that is quite tangible, so you get to feel and touch the asset. Like I mentioned earlier, tenant mix and tenant engagement is important. As an example, like I mentioned, we were with the industrials management team where they actually got us to give us first-hand experience and engagement with the tenants within those boxes. On the retail front, tenant mix has always been important. I alluded to the Lighthouse management team site visit where they actually engaged us on the potential prospects of a new anchor tenant within one of the retail centers that will improve on the tenant mix within that asset. Over and above that, asset management opportunities within the asset, we get to experience the potential uplifted asset management opportunities. Over and above that, there are competing schemes where these assets are located, so a physical site visit brings us closer to the understanding of those competing schemes. Again, an example is the Lighthouse tour, where the Lighthouse management team actually walked us across a few streets to actually get to see a competing scheme and compare it with their own specific asset. I think I'll stop here and actually thank the management teams and every stakeholder involved in these site visits. We do know this takes time and effort to organize, and we just want to thank everyone involved for providing us the opportunity to get closer with the assets.
Mbula, from what you've shared regarding your tours in the UK and Europe, I'm getting the sense like the property feel globally is relatively positive, despite, these macro themes of elevated inflation and rising interest rates, which has a weakening effect on global financial markets. Would you say that we are seeing like similar positive trends locally within the SA property sectors?
Yeah, I think I can sum up our recent tours and some of the conferences that we've attended over the past 6 months by saying that there's a big disconnect between what the equity markets are pricing in and what the landlords are actually experiencing on the ground. So we think despite the negative rhetoric globally, we have seen positive green shoots on the local front in terms of the different subsectors. Looking at retail, we have seen an improved occupancy across the board and trading density starting to trade to close to pre-COVID levels. On the industrial front, it's been a big spec of results there, depending on type. We think high-tech logistics continues to benefit from the strong boom in e-commerce penetration and demand, and we have seen strong market rental growth there with low vacancies. Unfortunately, the older boxes, manufacturing boxes, are still continuing to see an uptick in vacancies as they are not fit for purpose. Residential, despite being a small component of the sector, has also benefited somewhat. We have seen vacancies trending lower, but we do think this recovery will be constrained given the higher rise in interest rates and the cost of living. Offices, unfortunately, the story continues. Nothing new to add from my end, despite the fact that vacancies continue to trend up and landlords continue to be generous by giving generous incentives to tenants to essentially keep them within their boxes. But we think given the weak macro landscape that we're operating in, we don't think this sector will recover anytime soon.
Mbula, thank you so much for sharing your insights with us today. And I have to ask this, it's the last but not least, what is your outlook of the SA listed property sector?
Thanks, Bennett. Look, it is a difficult question to answer in these trying times. The sector has sold off recently given the uncertain macro landscape that we're currently operating in. We are seeing value in the sector, with the sector trading at significant discounts to NAV. And on a total return basis, we think the sector could deliver anything between 13 to 15% in absolute terms. We think this is attractive in real terms as well if we use the top end of the SARB's inflation target of 6%. In the short to medium term, however, I think the sector's total returns will continue to exhibit volatility given the uncertainty that we are seeing globally.
Thank you. To our viewers, thank you for your time. If you'd like to learn more, please refer to our full SA dashboard, or alternatively, please reach out to me as per the contact details below. Goodbye.